What's up, everyone? Welcome back to another episode of Masari's Unqualified Opinions. I'm Ryan Selkis at 2-Bit Idiot from the Citadel in an undisclosed location, not in New York, clearly working from some abode that's not an office. I have another terrific guest today in Nathan McCauley, who's the co-founder and CEO of Anchorage, an institutional crypto custodian. This is an interesting pairing because we actually just had a conversation with Mike Belshie. And maybe we can talk about some of the differences in institutional custody, general trends that you all are seeing in the market. We're going to touch a bit on the M&A environments as it looks like we're heading towards a period of consolidation. And you have made a couple of acquisitions, acqui-hires and acquisitions, I think, so far in just the first few months of the year, last 6 months or so. And then, finally, we want to cover all of the stablecoin markets and some of the mission critical solutions that you all are working on. Now that it seems the narrative is really bifurcated in crypto between what is hard money and what could perform well in a macro environment, given what's going on with the coronavirus, and what are the experiments that we need to foster so that we don't lose momentum, even if they're not needs to have right now across different protocols or across different parts of the value chain. So Nathan, why don't we start off with the origin story? It's as good a starting point as any, I suppose. But for our guests in particular, it's good to understand the context and kind of historical background that the person on the other side of the camera is coming from, and more than anything, just learn what iterations it took for you to take Bitcoin and crypto seriously enough to dive in full time.
Sure. So Ryan, good to be connected. Thanks for having me on the podcast. I too am in an undisclosed location, obviously not based in an office here. This is a home office or home lair, if you will. But been having a fun time. Been actually really impressed with everybody's ability to move to this remote work situation. Both our team and then all the counterparties and clients that we're working with as well. Everyone's dealing with it quite well. So you asked a little bit about the origin story. Where did Anchorage come from? Where did we start? What's our kind of our lineage, if you will? So the story really starts about a decade ago. My co-founder and I, Diogo, we were early employees at Square, and that's kind of where we first met each other. And what we have spent basically the last 10 years working on software security systems, whether that is Square's backend for holding all of its credit cards and the secure manufacturing facilities. I got to go to China and set up a secure key injection facility on an assembly line there in China. And so key management has really been our bread and butter for the last 10 years. And we've been looking over time to find some way to work together, start a company together. And so we spent a bunch of time at Square, built up a bunch of the systems there, got to really see it go from, say, 40 or so people when we joined to 1,200 by the time we left. At the end of our tenure there, we decided to join this company called Docker. Docker is a cloud computing technology for those within engineering. It's containerization. It's probably familiar to most engineers. As it's widely used in cloud deployments. I think something like 80% of AWS workloads, and then approaching 100% of Azure and GCP workloads are using Docker. And so that gave us an ability to kind of see broadly across the industry, do massively scaled security deployments, working anywhere from enterprise software companies to DoD deployments, kind of across the board. We got to work on a bunch of that, and then around middle to late 2017, started looking at cryptocurrency really seriously, as I think a lot of people were looking at it at that point, and basically found that there was a core problem in crypto that needed to be solved for institutional investors. Which is safe storage of their keys. There's this problem called custody. Custody really is about holding the keys and allowing institutional investors to do everything they would want. at that time we kind of did a survey of the market, and basically came to the conclusion that everybody was doing it wrong. Uh, Everybody that existed in the industry was approaching crypto custody in exactly the wrong way. Um, I think the easiest way I can describe it is that your first class in software security that you ever take has the professor stand up and say the only secure machine is the one that's turned off, encased in concrete, and put at the bottom of the ocean.
Mm-hmm.
And then the rest of your education is about how to not do that and how to actually build usable systems that work in the real world. And when we surveyed the landscape, we realized that everybody had started on day one. They had taken that thing that is supposed to be an idealized model and not really supposed to actually be used. And somehow it had spread as this meme across the whole world that it was the right way to do it. And so everybody in crypto at the time thought, hey, cold storage is the way to do it. Cold storage, everyone's bragging about their cold storage systems. And we viewed that as just anathema to how things would actually happen. And so we said, okay, we actually have like a really distinct technology advantage that we can do if we can build this right, use modern security practices. And so that was kind of the theory was we should build the system. We know it's going to take a lot of work. So we raised money in 2017, built up a pretty sizable engineering team, and then basically just went into stealth. We spent all of 2018 building our technology, didn't talk to anybody, didn't do anything except for building out the system. Launched in 2019 and then immediately started onboarding the biggest crypto funds in the world. And so that kind of period of stealth of, that first crypto winter, if you will, of post 2017, 2018, was where we got to really bear down and build. And so it was nice to kind of come out in 2019, start onboarding folks, start having people see that there is a better way. There is a better way to deal with crypto custody. 2019 was our story was onboarding clients, continuing to add assets, add other counterparties, start to do all that. And now coming into 2020, we're positioned extremely well. Like you talked about a little bit earlier, we've done some acquisitions. Maybe we can talk about that. Continuing to onboard clients. We've got a number of really significant partners. And we're almost thinking of it in the same way as 2018, where 2018 was a crypto winter where we got to build. 2020, to the degree we're in a macro environment that might be a little bit depressed, we also get to spend time this year building. So that kind of covers it as a high level. Happy to dig in any more or take the conversation wherever you'd like to go.
In terms of asset support, you've obviously mentioned you're working with some of the large crypto exchanges. What factors in to whether to support an asset? What type of onboarding process do you anticipate? And is that materially different for public-private blockchains, right? So I think Libra is maybe an extreme case, but I'm curious, as some of these other stablecoin initiatives get off the ground, you're going to want to support those as well as a licensed qualified custodian. Things that are built on Hyperledger or R3 or the like. Are you fully supportive of all of these different types of systems, or is it primarily crypto assets and ones that are built like Bitcoin, like Ethereum, and maybe to a lesser extent like Libra? I know we're going to talk about them in a bit.
Yeah. So our core platform has been built very, very flexibly. The core thesis of our platform is when you're holding keys, those keys ought to be usable. So you ought to be able to do transactions. You ought to be able to buy, sell. But you also ought to be able to do pretty interesting things like integrate with smart contract networks. So staking, governance, all of that should be default possible and frankly easy through your custodian. And so that base custody layer that we spent a lot of time building has allowed us to be extremely flexible in terms of what we support and how we support it. We're very responsive to client demand. If clients want us to support an asset, we're happy to prioritize it, and that naturally has us take as one input the coin's market cap, like how big is the asset, how widely traded is it, how much demand is there for the asset. But then we also, have to make sure that we go through a diligence process in terms of looking at the team that built the asset, little bit of securities analysis, although we're able to custody securities or non-securities totally fine within our qualified custody regime. And then as you start to look at private blockchains, or even kind of the same category, security tokens, we're looking at some security token offerings. In fact, we're announced as the custodian for the largest security token offering, or not necessarily the largest security token offering, but the first security token IPO. It's actually registered with the SEC. We're going to be the custodian for that. So the asset support equation, it's really paying dividends on the way we built the custody system, has allowed us to be very, very flexible there.
The black box in crypto in general is Libra. Much fanfare. The biggest story of 2019. It was, now somewhat controversial in terms of how it's being managed. Who is calling the shots, how actively involved Facebook is going to be. I don't want to get into the politics of it at your request. I would love the gory details if you wanted to chime in, but I can appreciate that that doesn't make sense for you. What I'm most interested in, though, is understanding exactly how you assess Libra and its tech stack and its productivity and the way that things are shipped and the quality that you've seen versus the truly open systems like Bitcoin, like Ethereum, the ones that are globally managed, globally distributed, but most likely do not have the same caliber of engineers to an individual as an entity like Facebook, right? Maybe because it's impossible. You can't pay them enough. You can't coordinate the efforts enough. You can't pull all the different moving pieces together quite the same way as you can when you're a $500 billion company.
Yeah.
What has your experience been? How did you first get involved and become one of the early members of the association?
Sure. So, bunch of questions there. Definitely happy to talk a little bit about the quality of the team that they've assembled. From a very early stage, it was clear that the team over at Facebook was taking this initiative very, very seriously and was going to hire extremely good talent, both on engineering, but even more broadly, their legal team, their business development folks. It was very clear that this was going to be a significant initiative. And from the early conversations, even before there was an idea of a Libra association, we got a pretty clear picture that was going to be the case. I think one of the most interesting things on the technical implementation side was it was very clear to them from the very beginning that the blockchain itself was inherently going to need to be high volume. And so because it was going to need to be high volume, you couldn't really have it be a science experiment that kind of grows over time. We've seen some of the more publicly launched blockchains that are hitting scaling issues. And over time, they'll be able to kind of adjust those scaling issues. But something at Facebook's scale, the kind of the ambitions that they have for Libra kind of necessitates that you have to think very far ahead. And it's actually pretty uncommon to have to think about that. If you think of a startup or any other kind of tech stack, you kind of iteratively build over time. With Libra, it was clear that was going to have to be super scalable from day one. And so they put together a fantastic engineering team. And when you go talk in the crypto community, there's a number of other projects that are looking to adopt some of the design decisions that they've made with the Libra blockchain. For example, some of the consensus mechanisms. I wouldn't be surprised to see some people look at adopting something like the Move programming language as a smart contract language. So there's a bunch there that I think is actually going to have really good effects for the whole ecosystem, even just on the tech level. So that's been really great. In terms of why we got involved and why we were interested in it, we started Anchorage because we wanted to see crypto furthered, and in our view, crypto gets furthered by increasing store of value, increased medium of exchange, increased unit of account, having tangible ways to use this across a broad range of different use cases, just helps the whole ecosystem overall. And so Libra was an obvious one to get involved in, just because you look at how massive the opportunity is, the distribution and reach that Facebook can possibly put behind this. It was really clearly something that we wanted to get involved with, and the fact that kind of just at the very beginning, they always wanted this to be an open system. There was never an idea that this would be a face coin that would be totally internal, private blockchain like you talked about earlier. The goal is always to kind of have this be a community-owned asset that could be trusted to be, over time independent from any particular control. So that all of that kind of factored into why we wanted to get involved.
Can you talk a little bit about the early contribution process? Because from an outside perspective, certainly, from a narrative perspective, okay, Facebook has hundreds of engineers that are working on this. And then they've got all of these other members in various capacities, but that probably are not putting anywhere near the same juice behind this as Facebook, at least initially. What were some of the early things that the custodians were responsible for versus the investors versus the other stakeholders on the traditional payment side, or at least what was the vision there, and how did you see yourselves slotting in as a member organization early on?
Yeah, I think one of the interesting things to think about there from the point of view of custodians, and this might be something that not a lot of people understand about custodians, is that as a crypto custodian, your engineering team ends up with a very, very broad understanding of the whole crypto ecosystem. And the reason for that is that you have to implement with every blockchain and integrate with every blockchain in a very stable, secure, and usable way. And so the kind of cross-cutting understanding of different blockchains, different engineering approaches that people have taken, ends up giving custodians a very, very good understanding that is in many ways unmatched by many industry participants. And so being able to have a seat at the table just to talk about, hey, here are things that make this easy for custody. Here are things that make this easy for smart contract networks, whether you're talking about here's the right way to do delegation, here's the right way to do governance. As a custodian, you end up having a lot of just a wide purview on how things might work. In terms of kind of the initial project and how it got off the ground, I think it's fair to say that a project like this, at initial blush, you look at it and you're like, oh, okay, that's actually impossible. And so somebody actually trying to do it has to take quite a few steps to just be able to germinate the idea. Because if you don't kind of germinate the idea, no one's going to believe that it's actually possible. And so the fact that Facebook kind of did a bunch of that work early on to look at the Libra white paper that they put out, starting to think about how this thing could actually work. You have to do a bunch of that stuff in order for people to even believe that something like this is executable and profitable, and possible. Something that people want to get on board with. And so they did a lot there, but frankly, I don't know of another way you could have done it.
Yep. And we'll see. There's the feasibility of coordinating with that many high-profile partners and just having anything stay under wraps as well, right? So until things were ready, it was tough to kind of put this out in the wild and have public debates between even the professional constituents for how this was developed. What are your thoughts on what's next for the project and where things stand today? Governance aside, internal spats aside, can we expect to see some movement here from the Libra Association, even if Facebook is and their involvement is dialed back a bit this year, or is this something that now extends into 2021 and maybe even further?
Yeah, I think there's a ton still going on. I mean, I wouldn't necessarily think of it as things are on hold either from the Facebook side or the Libra Association side. As
Mhm.
as far as I can tell, things are continuing to move. There's continued progress there. I think one of the interesting things here is thinking about how COVID and coronavirus factors into all of this. I mean, I think
Mhm.
what is very clear is that the need for a global distribution mechanism for delivering financial inclusion ends up being pretty important in a world that is having to quarantine for a little while. And so, in many ways, I think uh, we're learning as a society that these kinds of things are important and
Mhm.
should go forward. And, we got a letter from a U.S. senator urging us to stay the course and to stay in the Libra Association, in large part citing the fact that some of this kind of stuff is already available in, say, Africa and other parts of the world. And does the U.S. want to fall behind on this, or do we want to be an innovator? And I think it's really important for us to continue to be an innovator on this. Um, Certainly appreciated Senator Round's support on that. And I, I I view kind of the macro environment here as even more reason to stay engaged and stay involved on this thing.
It's interesting that you think about Libra in that light, when I think most people would think first and foremost about Bitcoin and it having its moments, given the stimulus that was passed, given the QE infinity, given everything's going on in the Eurozone right now. Hungary just suspended parliaments. Italy seems to be getting cozier and cozier with China, and some of the inroads that the Chinese have made through their Belt and Road Initiative
Yeah.
makes it seem more and more likely that you could have a crisis of sorts with Italy potentially leaving the EU. Um, the three largest reserve currencies in the world: Japan, U.S. Dollar, and the euro. One of them seems like it's very much in jeopardy. The other one is printing an unprecedented amount of money, and the third has already been dealing with a pretty significant recession due to some tax increases and the effect of the tsunami, or sorry, not the tsunami, the super typhoon
Yeah.
back in Q4 of last year. So when you think about reserves, Libra was ostensibly going to be a basket of reserve currencies. Now it seems that they've shifted their attention to being U.S. dollar reserve. How important is that now versus the digital gold narrative, versus the digital oil narrative of Bitcoin and Ether and other censorship resistant crypto assets? And what have you seen, if anything, from your clients that might be signal in terms of how the markets are reacting to current events and maybe anticipating future inflation or monetary debasement?
Yeah. So that's a it's funny because it is absolutely two sides of the same coin there. Um, I'd say the first thing with respect to kind of uh, how we're thinking about distribution of uh, we're printing money in the U.S. and how are we going to distribute that? What is the mechanism going to be by which people are able to get access to that? There's a lot of questions there around how do you deliver something like that to the unbanked, for example.
Mhm.
And so when I look at something like Libra or other kinds of crypto projects, it starts to look very promising in that regard. My old employer Square Cash for many people is acting as their bank account. And so when you think about how do people actually get access to a bank account, how do people actually get um, interest interest returning accounts that can help them keep up with inflation? Because basically, I mean, if you're holding cash, you're kind of in a bad shape if we're printing more cash. So you want to have at least some way to keep up with inflation.
Mhm.
People need ways to keep up with inflation, and it's hard to do that outside of any kind of financial institution. So anything that makes it easier to serve those kind of folks is a net win there. In terms of Bitcoin versus USD or fiat currency backed stablecoins, I think it's a very interesting question. We have diversity of clients. So we've got some clients who their thesis is we got to buy Bitcoin on the way down. because Bitcoin, we didn't ever think it was going to be this cheap ever again. So this is a great opportunity. So we've processed a lot of purchase requests over the past couple of months because wow, this is really affordable. It's also worth saying that, like, Bitcoin's market recovered in a sense. It didn't bottom out. It survived this crash, which I think gives it an anti-fragile kind of narrative where you say, hey, a global recession, what's looking like will likely be a global recession. It's doing pretty well. Sitting here, April 1st, 2020, it looks like it's doing well. And then in terms of reserve currencies in the world, the trouble with QE is that it is it's not a great idea, but the American economy is so strong that we might actually be able to do it for quite some time.
Yep.
And depending on, and when I say quite some time, it is conceivable that we could do this for 100 years. There are people out there saying that we should be issuing 100-year treasuries to invest in infrastructure. We could do.
This is the newest proposal.
Yeah.
Being an additional $2 trillion to spend on infrastructure because now is a golden opportunity, and you should never let a crisis go to waste, right?
Yeah, I mean, we have conceivably we could do another New Deal and upgrade the entire country. At
0% interest, and at a time when the dollar is the reserve currency for as long as that lasts. Who knows? But it's funny. This, I'm not sure if you know my origin story, but this is actually my origin story in many ways. In 2011, around the debt sequester, where it first became obvious to me that the U.S. debt doesn't matter, at least not to the politicians, because they had this very strict draconian deadline where they said, if we do not pass this budget resolution or we do not come to a compromise, there's going to be a 20% across the board cut. And sure enough, that got extended and kind of into perpetuity, and it led to the S&P debt downgrade. And the only way that you could have played that incorrectly as a market thesis, which is the way that I did, which was to buy gold, short the U.S. Treasury ETF, and ignore Bitcoin, because I wasn't technical and I didn't really understand how it worked, and it seemed like mad science and kind of not evolved enough. But that same thing is playing out again, right? And this happened in 2008. U.S. has a mortgage crisis. 2011, the U.S. debt gets downgraded. Now again, we might be the epicenter of this health crisis and financial crisis, and people can't get enough dollars because it's got this status as a Schelling point that is just too deeply ingrained into the legacy financial system to really remove from it. So one way to think about the path forward might be to think about which currencies fall, or after we get through the worst of the health crisis. Are there regions that you're focused on? Are there investor types that you're now targeting? We're starting to hear inbound interest from that look different from the traditional crypto fund manager or the institutions we already know are starting to play around with this asset class.
Yeah, it's a good question. So we've talked to a lot of people who I would say are crypto curious. They're doing their due diligence, whether it's a family office or all the way up to global asset managers. People are trying to get smarter. People are trying to understand. I think the fact on the ground right now is that, like, right now they have parts of their portfolio that are in a bit of trouble, either in a bit of trouble or they have a lot of opportunity. And so they're looking at some of their more traditional investment opportunities as something that is pretty promising, and you need to jump on those, while also saying, okay, where are the cards going to fall? And over the next 10 years, do we expect an equity uninterrupted bull market for another 10 years? Or is this going to be a time when alternative assets like cryptos might hold the day? And so I think we're dealing with a lot of those conversations. I will say that, some of the folks are just triaging their situation right now, and I think that's totally fine given where the market is. But I do expect that more people will be looking at crypto as an investment thesis over the next few years.
What's next on the roadmap for you guys? Has that changed at all given the circumstances, or is it just kind of business as usual, one foot in front of the other? What you have to deliver without giving away trade secrets.
Yeah.
Is there anything you're able to share about kind of the next milestones and big reveals that you might be able to tease? Because if I'm not mistaken, we're talking from the future right now. And you have, I think, an embargoed release for tomorrow morning. Today is April 1st. You have something for tomorrow morning. You want to talk about that a little bit, knowing that this is going to air probably April 6th or 8th?
Sure. Yeah. So we have a kind of a steady drumbeat of new announcements. And so the announcement that will be live by the time this launches is that we've added support for Ripple. There's actually quite a lot of institutional folks that have Ripple, and so we're looking forward to starting to onboard some of those folks. There's actually quite a lot of them who want to hold with us. But asset launches are really exciting because they give us kind of natural allies in the space, where you look at, hey, people that are trying to make their asset work, have it meet its hypothesis. It's a really fun way to get to work together. Beyond that, we're in a kind of weird sense, we just finished the best quarter ever for the company, and so from our point of view, onboarding clients continues at a pretty rapid clip, and we're starting to look forward at how do we become more a core piece of infrastructure for the industry? To give one example, the maker votes that needed to happen kind of over a period of a couple weeks there were in large part facilitated by our platform. We were able to allow clients to vote directly from custody all of their maker positions. And Maker was able to, update the parameters and do a lot of that in large part because we support their voting mechanism. So continuing to double down on those kind of native participation features is something that's very, very interesting to us. The other one that you'll increasingly see is going kind of all in on this idea of being able to trade and do other kind of prime brokerage activities out of your custodian. So we launched the trading desk earlier this year, kind of announced that along with our acquisition of Merkle Data. They're kind of a data analytics firm that we're using to help us do better job at brokerage and better job at other kinds of activities that you'd see out of a prime broker. And so we're looking at 2020 as a year to kind of continue to add assets, continue to ally ourselves in the market. But then also roll out new product offerings.
I want to go back to talking about Ripple a bit because, as you know, I've been outspoken about some of the reporting issues and discrepancies that we tend to see regarding XRP and its usage. This came up in a conversation with Daniel Vogel as well from Bitso, who talked about the corridor that they've basically built with Ripple to ensure that a sizable percentage of flows in the U.S.-Mexico corridor is actually leveraging the XRapid blockchain. And because Ripple has investments on either side of that corridor now between MoneyGram and then Bitso in Mexico, it is a channel that seems to be picking up steam. Are there other types of entities outside of crypto exchanges and kind of crypto money transmitters that are in this cohort that are leveraging XRP? And is that the kind of target demographic, or is it still exchanges that are supporting the assets and other crypto players, I guess, for lack of a better term?
Yeah, it's a good question. So our bread and butter is supporting crypto investors.
Mhm.
And so someone who has a crypto fund, they probably have taken LP money, and they're a number of general partners who are looking to allocate assets into crypto. And so we support those folks. And so at that level, it is sufficient for us to hear, hey, our clients want to invest in Ripple or any other particular asset. As a custodian, as an infrastructure provider, we do as much as we can to kind of take a hands-off approach to the assets that we support. Certainly do our due diligence and look at those kinds of things.
Mhm.
But for us, our main clientele are the crypto investors themselves, rather than kind of infrastructure players. I do imagine that we will see more infrastructure providers start to use our platform over time as we start to roll out more features, say like an API and those kinds of things.
Mhm.
But as of yet, our main clientele are the investors themselves.
What else are you excited about for 2020? What's the sexiest part of the business that if you had one banner image for this entire podcast, we could leave the viewers behind on? Because and I presented this challenge to Mike as well. Crypto custody is one of those like three pillars of institutional adoption that is necessary.
Yeah.
Data integrity when it comes to marking your books and ensuring that you have best bid and offer, regulatory clarity, which by and large is working itself out for Bitcoin, less so for other assets just yet, but for Bitcoin at least, there is quite a bit more clarity. And then the third is just qualified custody.
Mm-hmm.
You obviously handle the third, which is important, but how do you explain the sexiest parts of the business to your customers and generally to your kids?
Sure. I think what's most interesting here is we will, and I don't think this is going to be specific to us, but we will all wake up in, say, we'll just call it April 1st of 2021, and we won't perceive the people that we currently perceive as custodians to be custodians. Because I think what's going to happen is the notion and understanding of what crypto custody is and how it's dramatically different than traditional finance is going to morph pretty significantly. And so that at least looks like settlement layers, that at least looks like lending and trading APIs. And so when you kind of take a step back, I think we'll not even be talking about crypto custody in 2021. Because there's such a transformation of different things that need to come together. All those things I talked about dovetailed directly with staking, governance, and truly integration with the smart contract networks.
Mm-hmm.
This fact that you need kind of all of those in a single place is going to be something that is very different from, say, a BNY Mellon. It's also going to feel very different from a Goldman Sachs prime brokerage, and it's going to feel different than say an app store. And so it's all of those, but none of those really. And so I almost feel like we need a new term, a new category for what it is that we're all going to become. And so I have no clue if what I just described is sexy or interesting. In many ways, I hope that it is boring, because this kind of an infrastructure
Means
layer.
you're doing your job.
Yes. You want to be boring and so consistently helping your clients that they forget that you exist in many ways. And so that I think would be the headline here, is that there's a pretty massive transformation that's going on in the custody landscape, and it's going to be really cool to watch.
Well, Nathan, definitely appreciate you hopping on. What is your prognostication for how the coronavirus is ultimately going to shake up the crypto M&A scene? Are you guys actively looking for additional tuck-ins? Are you going to become acquisitive? How are you thinking about staffing and just kind of navigating this, given that you do have a pretty decent sized balance sheet?
Yeah, it's definitely a time to be looking at those kinds of things. One of my colleagues described it recently like Ali versus Frazier, where everybody should take their hits, take their punches for maybe 3 or 4 10 rounds,
Mhm.
and then come out of this swinging. And so I think what a lot of us are going to see, and certainly this is going to be the case for Anchorage, um, we're going to be coming out of this very, very strong, very, very well positioned, and it's pretty exciting to see what that's going to bring. Both just because of the opportunities that Anchorage is going to have. To the direct answer to your question, yes, we are very much considering multiple acquisitions, and so stay tuned to possibly see those happening. We already did the one earlier this year, but we're looking at least 2, maybe 3 more.
Mhm.
And beyond that, how is COVID-19 and coronavirus going to change the overall macro environment? I think that one is nearly impossible to predict. What I can say with certainty is that it is going to favor agile and reactive companies that are able to turn quickly, act on market opportunities. And so we're going to be paying very close attention to what happens. We have a number of hypotheses that we think are going to play out, but more than anything, we're looking to be flexible to how things start to shake out.
Excellent. Well, couldn't have said it better myself. I think that's what we're trying to internalize as well. How can we be fast, still, not meander too far from the vision and mission that we have for the super long term, right? But ensure that we're being realistic about roadmap, being realistic about where the customer needs are right now, which is as good a place as any in this podcast to say that anyone that's listening should head over to mainnet.events. We got to get you involved as well. June 1st through 3rd, our first and entirely virtual summit. I am excited to get back in the conference game. It will be my first conference production since Consensus 2017, Consensus 2016. So excited to get back on that saddle. And we've got 100 great speakers lined up, including maybe Nathan, maybe Diogo. We'll catch up on that off camera. But so far I've had about a 95% yes rate. So no pressure. And
good OKRs there.
We'll make sure that you have some announcements teed up for that anyway. You throw up the bat sign and sometimes people see it and want to get involved. So 50% of the profits are going to go to COVID relief in some way, shape, or form, whether that's teams that are sucking wind or we're in uncharted territories. We don't even know what the right response is yet. So, but that is going to be earmarked. So in the meantime, Nathan, this has been great. Appreciate you shedding light on the company, on Libra, and as always, looking forward to what you have coming out next, and appreciate your time today.
Ryan, it was a pleasure. Well, look forward to coming on again sometime.
And for everybody that's tuning in, until next time, be good, stay safe, peace.